Welcome to my Pinkcast for Accounting 2310. Glad you could join me. The sound might be a little off because I don't have my great headset with me, so bear with me on that. We have a goal today. That goal is to review discontinued operations accounting. Let's start with looking at what is a discontinued item. The definition's a little bit murky right now because it's currently being reviewed in the convergence move of IFRS and generally accepted accounting principles from the United States of America. But let's go with our best definition that we have. It would be when you discontinue a major line, segment, or dispose of a significant piece of your business. You're getting out of it indefinitely and won't be in that line again. Here's a hint. Accounting records account for the discontinued segment that you're getting rid of in their own accounts so completely that you can isolate the amounts. If you can't isolate the amounts, then it's probably not a segment that you've disposed of. So, what happens first is, when you have a discontinued item, the first thing you need to do is to remove the amounts from your totals. Let me give you an example. Let's start our example with the following income statement. You have a business whose total revenue is $100,000, expenses $50,000 for operating income of $50,000. I'm assuming a 30% tax rate in my example. Subtract that, and you can see income from continuing operations was $35,000. Now let's say we've identified a segment that we have discontinued. Let's write down their numbers. Here's my segment information, my discontinued segment. My segment I've gotten out of had revenue of $20,000, expenses of $25,000, and a loss of $5,000. Tax expense, or in this case benefit, the savings from that loss would be $15,000 for a net loss of $3,500. These numbers are currently included in these totals, and to do proper accounting, we must pull them out. So, we need to net the numbers. If revenue was $100,000 including my segment, $100,000 minus 20 will leave $80,000 for revenue. Expenses were $50,000 total, taking out the discontinued segment. That leaves $25,000. 50 minus 25 is 25. So, $80,000 minus $25,000 is income without the segment, would have been $55,000. Notice it agrees with $50,000 plus adding back the loss. Now let's look at the expense. Tax expense, 30% of $55,000 is $16,500. Let's subtract that, and you have income of $38,500 when you have pulled out the discontinued item. On the bottom of the income statement, we would now need to include the discontinued item separately. And we would say net loss from operations. And we would take the $5,000 and say it had a tax benefit of $1,500 savings. So the net loss from discontinued operations would be included in my net amount at the bottom of the income statement, and it would be $3,500 loss. So we have a total here. I'll put a $sign, 38,500 minus the net loss from discontinued operations brings us down to 35,000. So then the discontinued item would be reported in this section, and the financial statements I actually published would look like this. At the net amount, they would have the discontinued item pulled out of them and added in at the bottom. And notice I did good tax accounting. I had intra-period tax allocation going, meaning intra-period tax allocation, not to be confused with inter-period. I showed the tax effect of income taxes on the operations, and then I showed the tax effect on the discontinued item. So you can see total taxes were $15,000. We knew that from our first example, but they're shown in the section of the income statement that they relate to. That's good intra-period tax allocation. What I want you to notice is I quite literally removed the discontinued amounts, or the income or loss from the discontinued segment. I quite literally removed it from the totals and reported on it separately at the bottom of the financial statements. Can't write so fast, huh? That's not an option, that's required. So that's our first pincast that I wanted to go over, is that you literally remove the income or loss totals and report net and put them on the bottom. So one more thing we need to do. There are two components to discontinued operations that you must report on the face of the income statement. You have a couple of ways you can do it. Or you can just bring over the total and give the details in the notes, as usual. That's allowed. But I want to explore those two sections with you. The first one is from operations, which is exactly what I just showed you in the above example. I did not include the second one. The second one is the gain or loss on the disposal of the assets of the discontinued operations segment. My next pincast will work in both of these items, so please stay tuned and we'll watch it. I think 8 minutes is enough. Remember, on this one, our goal was to learn what a discontinued operation was and how to remove the amounts from your totals for financial reporting. In my next pincast, my goal will be to work with both components of discontinued operations. Thanks for joining me.